What is going on, guys? I know it's been a long time since I uploaded a video. I recently had a baby and she's basically taken over all of our time. But finally, here is a new video. So, I have been getting this question recently, and it's probably the most popular question that I see amongst beginner traders. And it was and sometimes is a question that I always ask to traders who are more experienced than me, which is, what indicator are you using? Everyone wants to know which indicator is that golden indicator, the one that is finally going to make you millions of dollars. And tell you the truth, there are only three things that you need to know, or three indicators when it comes to trading. And in this video, I'm gonna go over all three of them with you guys. So guys, like I was saying, when it comes to trading, there are three indicators that you need. And anyone who is successful at trading, who is profitable, they use a variation of these three indicators. Okay, so the first one is a variation of an indicator, or any indicator that is able to give you key levels. So you need to find an indicator that will give you reliable key levels of supply and demand. It will show you areas where there has been lots of buying pressure and areas where there has been selling pressure. It doesn't matter what the indicator is. It doesn't matter if you are able to find it yourself. It doesn't matter if you are using volume, but something that will help you find supply levels and demand levels. Number two is volume and price action. So you need to see what volume has been or in recent times and what volume is right now. And what I like to do is find volume by price. So what is the volume at the price levels, key price levels? What is price doing at price levels? You need to find an indicator that will help you determine what price is doing. And then number three is your psychology, to be able to get over greed, fear, FOMO, and all of this will happen with risk management and practice. This is something that is built over time that you just can't do in one night. You need to build this over time by taking risk on money that is something that you can afford to lose. This takes time. Number three, these two come a little bit easier, and I will show you guys how I am able to find key levels and volume and how to read price action, and a little bit how I work with getting around greed, fear, FOMO, all of that. Okay? So number one was here. We'll leave these kind of to the side. So number one is finding key levels in areas of supply and demand. So if we look at Meta, that is something that I traded the other day. My number one plan is to find key levels. So there are different ways you can go about this. Number one is the indicator that I created. I showed you guys this indicator recently, or I guess it was a few months ago now, but many of you guys have this indicator. This finds key levels from either the monthly, the weekly, whatever you like. So I usually like to look at the monthly key levels, and we can see that this 289 is a key level. We can see recently we've been bouncing around this 294, 295 range, and we can highlight these areas. So we know this could play as a support level. We can highlight this area right here. And why did I highlight this area? Because we can see recently this has worked as a resistance level, and in pre-market we kind of broke out of this a little bit. And then we'll just close this off. So now we have some key levels to work with. This area of resistance or prior resistance is what you would call an area of supply. Price failed to break out of this. Buyers found this to be too expensive and they were not able to break price above this range, and vice versa. This area was an area of high demand. When price came down to this level, buyers seen it as cheap and they bought around this area. This doesn't mean when price comes here you buy and when price comes here you sell. That is only the first level. You were able to determine a supply area and you were able to determine a demand area. Then we move on to the second thing, which is volume and price action. How you are able to find this just comes with what is easy for you, and you just try different things out. What has helped me is there are these indicators by Lux Algo where they find you areas of or key areas with order blocks, so places where orders have been placed recently, and you can see on different time frames. So you can see order blocks. This is daily order blocks, so places where buy orders and sell orders have been placed. And I have 3 different time frames. I have the daily, the 4-hour, and the 2-hour. This is a paid indicator. It's $70 a month, but I have found it useful for me and my trading. So when you turn this on, for instance, this is the daily, we can see here that recently around this $322 level, there was 400 million shares of selling pressure, or $400 million worth of selling pressure around this area, and that was around here in the beginning of August, which caused this big price drop. So nothing in our zone, so I'll turn that off, and then we can go to the 4-hour. We can see that when price came down to this demand zone in the past, that there was a lot of buying. There's some selling up here, and then this is the 2-hour, which I kind of just peek at sometimes because it's such a short time frame that it just gives you too many zones. But I can see that there is buying around this area, so if price comes here, we can expect that there could be some buying. Now we turn that off. So now that we have our supply levels, our demand levels, and then we see that there is more buying around here, we can expect that price might come to retest around this area if it breaks this supply zone. That's the kind of questions I tell myself before the market opens. And now is the key indicator, which is volume. That determines everything. Volume is where buy and sells are happening right now. So there is the volume indicator that everyone knows, which is this volume indicator at the bottom of the screen, which shows you volume at different time frames. But this is not the one I like to use. I like to use this volume indicator because this shows you volume at different price levels. So it shows up on the side of the screen here. So now we can see that a lot of action happened around $297. You can change the time frames. You can see that there is some buying around here, some buying around here, or you don't know if it's buying or selling. You just know that there has been more volume around those areas. So when I look at, or when I was looking at these charts, I seen a couple things. Number one, there is this supply zone that we recently broke out of and went to the upside, but there is not a lot of buying around this zone recently. Most of the buying, or most of the price action, is around here, which means price might come back to this zone. This is where most of the volume has been recently. We are in a zone where there isn't a lot of buying, which means that these buyers might be exhausted by now. And that is what I expected. Now, sometimes I use, or recently I have been using, footprint charts, and I will leave a link in the bottom of a different YouTuber who went over how to use these footprint charts. So these are footprint charts right here. They're just basically, it's charts just like the charts that we have, but it goes over volume in each candle. So I'll leave a link in the description if you would like to know more about footprint charts, but I don't know enough about them to be able to teach it. So anyways, back to this. So there was not a lot of buying. So when the markets opened up, I expected some selling pressure if we break below this. And that is kind of what happened. Markets opened up and there was some selling pressure. And we kind of moved back up into this zone again. And this is when I took my put position, expecting that this will pull back down. And I was looking at volume the whole time, also knowing that if we break below this high volume area, we can come back down into this zone that we've seen earlier, and that did happen. This zone eventually became an area of support, but we see how it rejected these low volume areas. And that is all that trading is about, finding key zones and reading what are traders doing in those zones, and you follow the trend of those moves. And the third one is psychology. If this move goes against you, you need to always have some risk management in place. So I expected price to come down to this blue zone, but I always had a 2-to-1 in case I am wrong. And there are a lot of other things that go into psychology, but that is the most important in my opinion, is to have some risk management there, and then to practice, to trade every day that you can trade. Alright guys, that is all for this video. I know I was kind of going out on a tangent, but I'll try to make more videos, and my plan is hopefully to get to a point where I can make videos either the night before or the morning of trading to show you guys areas where I am looking at for specific stocks. If that sounds interesting, comment down below that you would want that. Alright guys, that is all for today. Peace.